Ladies and gentlemen, let me tell you something very clearly. The number you see on your screen right now is the least important thing that happened today. If you are focused on $79, you are missing the signal. You are staring at the scoreboard while the entire stadium is on fire. Because the real story today is not a price. It is not a candle. It is not a chart. The real story is a name. And that name is Elon Musk. While most people were watching the charts move up and down, while algorithms were fighting over pennies, one of the most powerful industrial leaders on the planet did something very rare. He broke silence. On X, formerly Twitter, Elon Musk responded to a report about a silver shortage with four simple words. This is not good. Silver is needed in many industrial processes. To most people, that sounds harmless. Almost boring. This is not good. It sounds like a casual comment. Like an observation, like an opinion. But that reaction only comes from people who do not understand who is speaking. This is not a hedge fund trader talking about his quarterly bonus. This is not a TV analyst trying to get clicks. This is not a YouTube influencer guessing price targets. This is the CEO of Tesla, the head of SpaceX. The man whose companies sit at the center of electric vehicles, solar power, batteries, rockets, satellites, and AI infrastructure, and all of it depends on silver. Silver is not decoration for Elon Musk's world. It is not optional. Silver is the most electrically conductive metal on Earth. There is nothing better. You cannot build high-efficiency solar panels without silver paste. You cannot build modern EV battery systems without silver contacts. You cannot build advanced electronics without silver pathways. There is no substitute that works the same. Physics does not negotiate. So when Elon Musk says, "This is not good," he is not talking about price. He does not care if silver is $79 or $100. He has billions in cash. He can afford any price. What he cares about is availability. This is not good means, I may not be able to get the metal. My supply chain is at risk. The paper market is lying. The shelves are empty. And this is the moment the entire story changes. For the last 5 years, silver has been a financial war. Silver investors versus banks, retail traders versus shorts. Paper contracts versus price suppression. It was a game, a casino. People argued over charts. They fought over margin calls. They waited for short squeezes. But as of today, that war is over. The industrial war has begun. Because when the largest industrial consumer of silver publicly acknowledges a shortage, this stops being speculation. This becomes survival. Tesla cannot print silver. Tesla cannot use derivatives to replace metal. Tesla cannot cash settle a factory. If the silver does not arrive, the assembly line stops. If the assembly line stops, revenue stops. If revenue stops, the stock collapses. If the stock collapses, the empire shakes. Elon Musk is effectively short physical silver, not short like a trader. Short like a manufacturer who needs something and doesn't have it. And here is the key difference. If a bank like Morgan is short silver and price rises, they lose money. They write a check, it hurts, but they survive. If Tesla is short silver and supply disappears, they lose production. They stop existing as a functioning company. That is the difference between financial pain and industrial death. So when Musk sends that message, he is not speaking only to investors. He is speaking to every major CEO on the planet, to Apple, to Samsung, to battery manufacturers in Korea, to solar giants in Europe. He just fired the starting gun. Before today, these companies trusted the system. They trusted just-in-time inventory. They trusted the London vaults. They trusted COMEX numbers. They believed metal would always be there. Musk's tweet says, that trust is gone. He is looking at the same data we are, falling inventories, growing deficits, China tightening control, and he understands something critical. Just-in-time is about to become not-in-time. Now imagine what happens next. Samsung sees that tweet. They panic. They call their supplier and say, double our order for 2026. No, triple it. And store it in our vault, not yours. Apple sees the same tweet. They panic. They secure strategic reserves. This creates corporate hoarding. Not to speculate, not to trade, but to keep the lights on. This is exactly what happened with toilet paper in 2020, except this time, it's not paper. It's a metal that runs the global economy. And when giants start hoarding, price does not move slowly. They don't bid up by cents. They sweep the order book. They buy everything at $79, then $85, then $90. That is why silver exploded today. The market is front-running corporate panic. Algorithms understand this. They know Musk does not talk about commodities unless there is a real problem. And history tells us something else. When Elon Musk publicly commits to a resource, markets change. When Tesla bought Bitcoin, Bitcoin doubled in weeks. And now we are hearing rumors, supported by this signal, that Tesla may move to secure physical silver directly or even invest in mining. If that happens, $100 is not the target. $100 becomes the floor. This is not a bubble. This is the market waking up from a 40-year lie. Silver was treated like a paper toy for decades. Today, it reclaimed its true role, a strategic industrial asset. And the people who actually need it are realizing something terrifying. The paper sellers never had as much silver as they claimed. But this story goes deeper, much deeper, because Elon Musk is not reacting only to a shortage. He is reacting to a date that is less than 4 days away. And that date changes everything. If you want to understand why Elon Musk said, "This is not good," you have to stop looking at charts and start looking at the calendar, because this is not a vague fear. This is not a long-term theory. This is a deadline. In less than 4 days, the rules of the silver market change forever. On January 1st, 2026, China officially activates a new export licensing system for silver. At first glance, that sounds boring. Paperwork, forms, stamps. But do not be fooled. In the language of the Chinese government, export license is a polite word for blockade. We studied the fine print of this policy very carefully, and it is designed to do exactly one thing: keep silver inside China. Let me explain how. Under the new rules, any company that wants to export silver out of China must meet two conditions. First, they must have annual production capacity of at least 80 tons. Second, they must show credit lines of roughly $30 million US. Now, those numbers are not random. They are a guillotine. They instantly eliminate hundreds of small and mid-sized exporters. Independent refiners, trading houses, private brokers. These companies used to supply silver to the West. Overnight, they are banned. Too small. Not enough volume. Not enough credit. So where does their silver go? It cannot leave China. It stays inside the country. It floods the Shanghai market. It flows directly to Chinese manufacturers. To BYD, to cattle, to Chinese solar giants. This is resource nationalism. China is saying something very simple. We make the solar panels. We make the EV batteries. We make the electronics. Why should we export our advantage to the West? And if this sounds familiar, it should. China ran the exact same playbook with rare earth metals 10 years ago. They tightened exports. They crushed foreign competition. And they forced global manufacturers to move production to China. Now they are doing it again, but this time, the resource is silver. And the timing is no accident. They are closing the door as the building catches fire. Because China sees the same data Elon Musk sees. They know the global market is already in deficit. They know inventories are collapsing. They know that once physical shortages appear, the country holding the metal wins. And here is the key fact most people do not understand. China controls 60 to 70% of global silver refining, even when silver is mined in Mexico or Peru. Much of it flows through Chinese smelters, so when China restricts exports, the global supply chain snaps. This is why the global price you see on your screen becomes meaningless. There will no longer be one silver price, there will be two. One price inside China, where metal exists, and another price outside China, where panic begins. This is why arbitrage is dead. In the past, traders would say, if silver is expensive in London, we'll buy it in Shanghai and ship it. That trade is gone. You cannot ship it. You do not have the license. You are not state approved. The metal is trapped. This creates a physical iron curtain. On one side, Chinese industry gets priority access. On the other side, Western industry fights for leftovers. This is why $79 is not expensive. It is early. The market is trying to price in a shock that has not officially started yet. January 1st is the start date. Now imagine what happens next. It's February. A US electronics manufacturer places its usual order with a Chinese supplier. The response comes back, force majeure. No license, no shipment, no metal. They panic. They turn to London. They turn to New York. But those vaults are already draining. So China's export ban does something extremely dangerous. It forces all Western demand into Western vaults. It concentrates panic. A shortage becomes a crisis. And you have to ask the most important question: why now? Why January 1st, 2026? Because China sees the math. Global demand is roughly 1.24 billion ounces. Global supply is stuck near 1.01 billion ounces. That is a 250 million ounce deficit. And in a deficit market, the country holding physical metal controls the future. China is securing its lifeboat before the ship sinks. This is what Elon Musk understands. He is not worried about price. He is worried about factories in Texas and Berlin shutting down because silver paste doesn't arrive. He is realizing that the free market for silver is gone. It has been replaced by a state-controlled system where access is a privilege, not a right. And this leads us to a truth Wall Street ignored for decades. Silver is not a pet rock. Silver is industrial oxygen. And the oxygen supply is being shut off. Everything we have talked about so far leads to this moment. Because shortages alone do not break markets. Illusions do. And the biggest illusion in silver is not about mining. It is not about demand. It is about paper. For decades, the silver market has operated like a magic trick. What you see is abundance. What exists is scarcity. The futures market in New York trades silver as if it is unlimited. Contracts are created, traded, and recycled endlessly. But behind all of that paper, there is only a tiny amount of real metal. We have a number for this imbalance. It is called the paper-to-physical ratio. And right now, that ratio sits around 356 to 1. Let me explain what that actually means. Imagine a warehouse. Inside that warehouse sits one single ounce of silver on a table. Now imagine 356 people standing outside. Each one holds a piece of paper. Each paper says, "I own 1 ounce of silver stored in this warehouse." They all paid for it. They all believe it is real. The bank told them it was there. For 40 years, this system worked. Why? Because nobody asked for the silver. They traded paper with paper. The music kept playing. The chairs were never tested, but today, the music stops. Because industrial users are no longer interested in paper. They need metal. And when Elon Musk says, "This is not good," he is signaling something critical. I want delivery. When companies like Tesla, Apple, and Samsung demand delivery, the illusion collapses. Out of those 356 claims, only one can be honored. The other 355 get nothing. They do not get silver, they get cash. And here is the problem. Cash is useless in a physical shortage. You can receive a check for $79, but there is no silver available to buy. The real street price might be $150 or $200. You are paid yesterday's price for a metal that no longer exists. That is how paper dies. And we are already seeing the early cracks. Registered inventories at COMEX are down roughly 70% since 2020. London vaults are down nearly 40%. The buffer is gone. At current demand levels, some regions hold only 30 to 45 days of usable silver. 30 days, that is not a reserve. That is a countdown. This is why price is moving vertically. Not because of inflation, not because of speculation, because smart money is rushing to turn paper into metal before the door closes. This also explains why banks are terrified of Elon Musk. If Musk decides to bypass COMEX and buys directly from a mine in Mexico, that silver never touches the paper market. Remove the collateral, and the leverage explodes. If Tesla buys just 10 million ounces, it exposes billions of ounces of fake paper claims. You cannot print conductivity. You cannot print solar panels. Industrial demand is the audit, and the auditor has arrived with trucks. This is why $79 is not expensive. In a one-to-one world, where price reflects real supply and demand, silver cannot trade at paper fantasy levels. The price must rise high enough to ration demand. High enough that someone says, "I won't use silver unless I must." That price is unknown because we have never had a free silver market. But there is one place where paper has already lost control. The East. If you want to know the future price of silver, do not look at New York. Do not look at London. Look east. Because when paper markets lose control, price discovery moves to the place where physical metal changes hands. Right now, that place is China. while traders in New York celebrate $79 on a screen. Something very different is happening in Shanghai. According to the Shanghai Gold Exchange and local physical premiums, silver is already trading above $80 per ounce. And this fact alone tells you everything you need to know. In a normal market, this situation cannot exist. If silver were $79 in New York and $84 in Shanghai, banks would perform arbitrage. They would buy silver in New York, ship it to Shanghai, sell it, and lock in a risk-free profit. That is how global prices stay aligned, but that trade is broken. Because once silver enters China, it does not leave. Export licenses block the exit. This means arbitrage, the force that keeps markets honest, is dead. And when arbitrage dies, price splits. We are now living in a two-price world. Price 1, inside China, higher price, real metal, state-controlled excess. Price 2, outside China, lower price, paper promises, rapidly shrinking inventories. This gap is not noise, it is a message. The Shanghai premium is the future leaking into the present. It is telling us where price must go once the West fully realizes the truth. Chinese buyers are paying more because they understand scarcity. They are closer to the factories, closer to the supply chain, closer to reality. If they are willing to pay $80 plus today, it means $80 is cheap. They are paying extra to jump the line. And when you see premiums explode, it means the spot price is lying. The spot price is the price of a contract. The Shanghai price is the price of survival. So when you look at your screen and see $79, do not think expensive. Think discount. Think, I can buy silver in New York for less than it costs in the world's largest manufacturing hub. That is not a bubble. That is a pricing error. But this window is closing. Western vaults are draining fast. As inventories fall, the Western price must snap upward to meet the Eastern price. It is like a rubber band being stretched. Eventually, it snaps. And when it snaps, it does not move slowly. It jumps. Now imagine what happens when Elon Musk stops buying indirectly and starts buying directly. When Tesla demands COMEX delivery instead of Chinese supply. Suddenly, scarcity in the West becomes extreme. This is the vacuum phase. China's export ban isolates the Western market. COMEX becomes an island, and every short position in silver becomes dangerous. In the past, if a bank was short silver in New York, they could call China and source metal. That escape route is gone. Now, when delivery is demanded, there is nowhere to run. This creates the conditions for a super squeeze, a squeeze with no ceiling. Because there is no supply valve to release pressure, the $80 plus price in Shanghai is not speculation, it is the industrial floor. It is what real users have agreed is fair value to keep factories alive. And once price discovery fully shifts west, moves will not happen in dollars. They will happen in jumps. You will go to sleep at $82 and wake up at $92 because a major delivery failed. If you can still buy physical silver today, at prices close to the paper market, you are arbitraging reality. You are buying unobtainium while it is still priced like a toy. And this leads us to the final conclusion. If China is hoarding, if Musk is panic buying, and if paper leverage is 356T01, then $79 is not the top. It is the launch pad. Now we arrive at the conclusion. But in reality, this is not the end of the story. It is the beginning of a new era. Everything we have covered so far points to one unavoidable truth. $100 silver is not a prediction. It is a requirement. Let's be very clear. If you are waiting for silver to return to $25, you are waiting for a world that no longer exists. A world where China exported freely. A world where inventories were full. A world where industrial demand was optional. That world is gone. We are establishing a new floor. And I am going to say this directly. $100 is the new industrial floor for silver. Now, that sounds extreme to some people. We are at $79 today. $100 feels far away. But only if you look at silver through the eyes of a retail trader. You need to look at it through the eyes of an industrial beer. For Tesla, Samsung, or Apple, the difference between $30 silver and $100 silver is meaningless. Let me explain. A $50,000 electric car uses roughly 1 ounce of silver. If silver costs $30, that is $30. If silver costs $100, that is $100. Does a $70 increase stop someone from buying a Tesla? No, but not having silver at all stops the factory. This is why industrial demand is now price inelastic. They will pay whatever is required. And this is where the financial system starts to crack. Because silver is not just a metal, it is also collateral. Banks did not just trade silver once. They leased it, swapped it, rehypothecated it, and stacked paper claims on top of it. Silver became a foundational block in a tower of leveraged finance. Now imagine what happens when a bullion bank cannot deliver. The default does not stay in silver. It spreads, margin calls trigger, collateral is seized. Treasuries are dumped, liquidity vanishes. This is how a commodity squeeze becomes a systemic crisis, and this is why the Federal Reserve stepped in. They did not step in because they care about silver investors. They stepped in because the banking system was at risk. They faced two choices. Choice A, let the market clear, let bad baits fail. Let silver reprice violently to $200 overnight. Choice B, print money, inject liquidity, save the banks. They chose choice B. They always choose choice B. And here is the fatal mistake. Printing money to stop a silver squeeze pushes silver higher. Printing devalues the dollar. Silver is priced in dollars. The feedback loop begins. To save the banks at $77, they print billions. That printing pushes silver to $85. Now they must print more. They are trapped. They cannot stop printing without collapse. They cannot keep printing without destroying the currency. This is the doom loop, and the market sees it. The Fed put has moved. For decades, it sat under stocks. Now, it sits under silver. If silver falls, shortage is rebuilt. If silver rises, the Fed prints. Heads you win, tails you win. This is why miners are exploding. The equity market understands before the headlines do. There was no press conference, no speech from Jerome Powell. But a single emergency liquidity move said everything. The pivot arrived quietly. And by choosing the banks, the Fed surrendered to inflation. This does not just affect finance. It affects geopolitics. Beijing saw the printing. Moscow saw it too. They see weakness. They know the US must inflate to survive its own leverage. So they tighten supply. They hoard metals. They press the advantage. This is economic warfare. And silver sits at the center of it. You cannot dilute silver. You can dilute dollars. You can dilute bonds. You can dilute paper promises. But silver is element 47, forged in supernovas. Finite on Earth, the easy metal is already gone. This is why silver is becoming money again. Not because people like it, because systems need it. So here is the final reality. We are witnessing the largest wealth transfer of our lifetime. From paper to physical, from promises to things. From leverage to reality. Do not trade real assets for paper that is being printed to save broken systems. When silver crosses $100, do not rush to sell it for cash. Use it, leverage it, borrow against it, trade it for land, businesses, and productive assets. Do not take your lifeboat and jump back into the burning ship. The flare has been fired. The battlefield is visible. And for the first time in decades, the game is rigged in favor of reality. This is not hype. This is history repeating. And this time, you can see it coming. This is Finance Historian Time. If this helped you understand what's really happening, like, subscribe, comment, share. The paper era is ending, and the silver era is beginning.